You're entering CNBC TV18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
Welcome back. There are a couple of themes running in the finance space which we want to discuss today. Of course, there are many themes in the finance space, but there are two themes that we want to discuss with our guests. One is how badly hurt is the MFI space, and Vishal Goyal of UBS, the head India research and banking analyst at that brokerage, has written some reports on it. And we also want to discuss this resurgence of investor interest in public sector banks other than SBI. SBI, of course, has been a marquee performer in 2021 itself. So in banks other than SBI, is there an interest because the entire NPL cycle appears to have turned, or at least that seems to be some people's guess in the market? And for that as well, we have a veteran, R.K. Bansal, the Managing Director of Edelweiss ARC and formerly the ED of IDBI, joining us. Gentlemen, good morning and thank you very much for joining us. First to you, Vishal, and your view on MFIs. Do you think that there is going to be a major problem for these companies? There are not so many standalone MFIs. Some of them have got, of course, merged into banks, like we know in the case of IndusInd. So your general views first.
Yeah, hi Lata. So I think the microfinance sector was the most impacted during COVID last year as well. And therefore, even after the end of moratorium, we saw huge build-up of overdue book, which is, they call it PAR book, portfolio at risk. And we saw almost 17-18% of the loans turning overdue. Now from this book, the expectation was, as the unlock happens, as the economic activities resume, we should be able to cover large part of this overdue book through collections. But our analysis on this data suggests that if you only look at that overdue book, almost 224 billion rupees of decline in the last 6 months, and 64% of the decline is because of NPAs, like 90 days plus overdues, and the balance book is still lying in the other two buckets of overdues, which is 30 plus and 60 plus buckets. So it seems that there wasn't any collection, or at least the collection couldn't recover the overdues built up which happened in the previous wave. And now we had the second wave and the lockdowns after March as well, which should impact another, again, the collections and overdues.
I think we've lost the link with Sonia. But Vishal, if I can persist before I come to the PSU sector with Mr. Bansal, I just wanted to ask you, the MFI sector has gone through these in the past, but well-capitalized companies have been able to write off, or they have found private equity capital. Many instances come to the mind. The way SKS re-emerged, the old SKS. Likewise, even after demonetization, a lot of the small banks and MFIs just wrote off some of their loans, gave new loans, because the amounts involved are small. Private equity trusted them and they could come back. So what is your view of the stocks in the sector without naming names?
Yes, so that's right, because there is inherent profitability in this business. The spreads are decent. So therefore, once you have written off the back book or the back book problems, you can always look to 15 to 20% ROE business in microfinance, and that's why we saw the recapitalization in the past. Even I think in the current cycle, I don't think this would bring down the banks or bring down the NBFCs in such a way, but it's a write-off event at least.
Got it.
Okay. Mr. R.K. Bansal, who is the MD of Edelweiss ARC, joins us now to give us his view as well. So Vishal, just stay on. Mr. Bansal, I wanted to ask you, if you can give us a little more details on which are the segments which have been most impacted across financials because of what we've seen with the second wave.
Good morning. See, overall, if you really see in the second wave, the maximum stress has been in the SME space and especially in hospitality. So some of the stress which we are not seeing in banking space is the large corporate, because most of these large corporates earlier became NPA and some resolution is happening, or banks have made good provisions against them. So this round of stress is actually in SME, personal loans, unsecured loans, and even consumer finance or vehicle loans, because people have lost jobs or there is a business impact, I think everywhere in the small shopkeeper, etc. So this round of stress is more than corporate, it will be more in SME and personal loans.
Okay, Mr. Bansal, Mr. Bansal, the market is now veering to the view that public sector banks other than SBI deserve notice. This was probably triggered also because Bank of Baroda and Union Bank reported better numbers, though you can't say that of PNB so much. I mean, the stress has clearly declined. As you are a veteran of that cycle which started in perhaps 2012 or 13, do you think that large loan cycle is over and now public sector banks are on a better wicket?
Yes, Lata, I agree, because the cycle which started mainly in infra space and power, EPC, roads, etc., and some large manufacturing. So manufacturing has already got resolved most of the cases. Power sector, a few cases are still left, but at least banks have made good provisions. EPC, again, the same thing. So some roads are still being resolved by the banking system. So overall, if I look that cycle, I think it is almost fully provided by the banks today.
But you are talking of another cycle. I mean, you are saying that SME, uncollateralized loan, SMEs, especially in the hospitality sector, how do the large public sector banks fare in this area? Do you think it's small enough for them to take it in their stride and now they have a bit of ECLGS help? Or would you still worry about the bulk of public sector banks other than SBI?
Yeah, so typically what I was saying in corporate sector, that round is almost fully provided. The second round, which came with some larger in aviation or in NBFC space, that is almost also got fully.
Got over.
See, I mean, you can't, of course, stop creation of NPA, but last 3-4 years, banks have not done large lending. So hopefully that is helping them in large corporate space. But in SME and retail, we are seeing some increase in the NPA. I was saying in MFI segment also. Okay. But overall, percentage-wise, this doesn't impact so much banking space, because one is this guarantee scheme of government. Secondly, even in MFI space, the MFIs, I think, keep on giving some money, and accordingly it remains standard to a large extent. So the percentage and the impact on the banking space will be much less. I think they have more capability to resolve these cases and to help these clients, so which can continue for some time. And these people do pay once they have the capability to pay.
What's your take, Vishal? Do you think the other public sector banks now deserve a good look? And likewise, even the mid-cap private sector banks. I mean, conversation with experts like you invariably end with Kotak, HDFC, Axis, ICICI. But should we now start looking below that level, because the economy itself could be on a positive wicket?
Yeah, Lata, I think it's a fair question. So what we saw in the last 10-12 years is a very bad corporate NPL cycle, which impacted most the PSU banks and also some of the private sector banks as well. And that's the time when the retail or defensive banks actually, earn their premium valuations. It seems that since the corporate cycle is kind of ended, at least the previous one, which was driven by infra, power, commodities, all are, turning in favor. To that extent, I think the balance sheet looks much better for the PSUs, for the like some of the mid-sized banks. But I think one still needs to do decent scrutiny in the individual names, because I think the idiosyncrasies of underwriting, MSME exposures, how they took the retail exposures, I think that can, throw surprises in individual names. But as a group, I think I kind of agree that, we like there is a a good reason to look at all these names again.
Okay, fair enough. So a final question on that issue to Mr. Bansal, who wearing your current hat as Edelweiss ARC, do you think now the entire system, I mean, you saw Carlyle coming into PNB Housing, we saw the Serum Institute coming into Magma. So both because of private equity, ARC and the IBC process, you think the bad loan cycle will not be too bad this time around?
Yeah, so this cycle, which as you rightly said, started somewhere in 11, 12, that seems to be almost over.
No, I mean the new one because of COVID.
I mean, what I'm saying is there are a lot of still cases not resolved, but then that is fully provided and they have to, The new cycle in MSME space and retail space, actually, or mid-size sector, this will get resolved with a mix of some restructuring, some government guarantee scheme help, then sale to ARCs and also settlements. So I think housing sector where this Carlyle equity or whichever has come, that has not shown much NPA in India, typically because of so many reasons, emotional and cash element in houses. So that will still remain good. Some, I think, stress we will see in personal loan and unsecured loans, but that can be managed. And ARCs, like say even at our ARC, we have built up capacity for retail loans. And in fact, we have done a lot of deals in retail loans recently, last 6 months. So I think that is one segment which will go up for some time.
Okay, all right. It could trigger another discussion altogether on how ARCs are going to participate in the new bankruptcy cycle, but that discussion on another day, Mr. Bansal. Vishal and Mr. Bansal, thank you very much for joining us in this discussion.
Thank you, Lata. Thanks.
Okay, with that, we get back to the markets.